SVC Media.
Welcome to the iGaming Daily Podcast, analysing the news from the betting and gaming industry all over the globe, supported by Optimove, the #1 CRM marketing solution for the iGaming market.
An unforgiving US media landscape continues to challenge Catena Media in 2024. Last week, the affiliate PLC published its Q3 trading update, confirming ongoing declines in revenue and EBITDA as accounts report a $40 million impairment charge to streamline the business. Despite rebalancing its books, Catena remains committed to the US as its growth market for sustainability and long-term value. With new CEO Manu Stan at the helm of a beleaguered PLC, can he steer Catena Media towards stability as new vultures eye its underperforming assets? iGaming Daily is brought to you by Optimove, the #1 marketing and CRM solutions for the global iGaming market. I am Ted Menmuir, and joining me today we have SVC America's editor, Jess Welman. Jess, how are you doing? And happy, is it Labor Day today in the States?
No, it's Veterans Day today in the States.
Okay, sorry, my mistake. And thanks for taking time to discuss this topic.
Yeah, I mean, full disclosure, I think it's good to get this. I used to work for Catena. I was with the group for about 3 years. I haven't been with the group since 2021, but that's why we figured I should come on and chat with you.
So the interesting is we'll have a good perspective of what's happening and also what's happening to the media landscape in the States. So let's go to the coalface, and we know that Catena is in trouble. But what do the numbers reveal about its current predicament?
I think that the big realization was that they had not really thought about how to streamline their organization particularly well. We've seen they did a couple of rounds of layoffs in the past year or so. The first one was like shared sources. The second one touched editorial a little bit. This most recently layoff the week before they announced Q3, based on who has been let go, it seems like they, for the first time, are really thinking, how do we maximize the value of our editorial team?
So interesting there. When we talk about underperforming assets, and on accounts they booked in a $40 million impairment, and that's directly attributed to underperforming sports betting websites. Why specifically is it going through kind of these choppy waters with its sports betting portfolio?
So I think that if you look at the U.S. affiliate scene in general, that what you saw across every company was that from the repeal of PASPA up until about, I'd say, I don't know, a year ago, it was just a gold rush, right? We had, with the pandemic, so many states rush into legalization. We're now at the point with Missouri where we have 39 states. And it's real easy to make money as an affiliate when you have new markets opening up all the time. You know, you just mobilize and get ready for that market to go. You do your best. I think the hardest thing for affiliates back in this period was trying to age your website enough in advance of a state launch to rank for it. But now that we have reached the point where, one, there are simply not a lot of states left to legalize, and two, you know, the pace of the legalizations has slowed down tremendously. Everybody, not just Catena, BC, XL, we haven't seen GDC stuff yet, but I'm guessing it'll be somewhat similar, are like, oh yeah, turns out when most of your financial success is because this one-time thing of a market opening up, then yeah, you can't replicate that. You can't just like make more Colorados, you know?
Okay, can you reflect back on that kind of initial sugar rush for US media, iGaming media, and how that has it kind of impacted the business long term? I mean, how the good old days came back to kind of bite these companies.
Oh, yeah. So Stan said as much, and listen, he's going to be more honest about this than a lot of people because he wasn't there when this was happening. You know, like it's much easier for him to be like, well, clearly this is where it went wrong. Whereas I don't know if like Gillespie or Peterson or some of these others or Sogard are going to acknowledge this. He's like, we didn't build brands. There was no future proofing in what they were doing. It was, okay, well, we have 200, 500. I wouldn't be surprised if it was thousands of keywords that we're tracking where we rank on Google for them. And that is the sole determinant of how we run our business. And now that you are at the point where all of the people who are Googling new sign up bonus have kind of dried up, I think Stan and others realize like, oh, none of the content sites in our portfolio have a particularly committed audience. None of our brands have really been built as for the purpose of bringing people back over and over again. And because we didn't do that, and because this very easy revenue stream has dried up, we're now in a position where we are behind the 8 ball compared to some of their competitors. Like BC, by comparison, if you look at their portfolio, Action Network is a site. It's a site with famous writers. It's a site that people know and recognize and respect and go to. And I don't really know if Catena has one of those in their portfolio at the moment.
Really, really interesting take. And it's funny that you mentioned like that kind of brand building principles, you know, not just building SEO websites, but building websites that people keep on referring to and keep on going back to. And in that as well, I mean, do you think that the revenue makeup, we've seen so much talk of leadership wanting to kind of modify the revenue streams and going towards kind of more sustainable rev share away from CPAs. But do you think those initial big kind of 3-digit CPAs impacted the affiliate strategy?
I think it was less CPAs and it was more first-time depositors, FTDs. That, you know, is that somewhat because they weren't doing rev share and that wasn't really the way? I don't think anybody was really doing rev share at the beginning of this in the US. I think the issue is less about the structure of how they get compensated and more and you've seen operators kind of push back on this. They do have to kind of find a better way to compensate affiliates for the quality of customer that they're bringing. Because in a lot of these new states and new rollouts, I think some of this backlash and some of the people like a Rush Street who have pulled back with some of these affiliates is because they were bringing bonus hunters to the site. They were bringing people who were going to hit the deposit, get the offer, and then leave. And that's not really beneficial to the
I think that comes with a caveat too, because that is as much down to the sportsbook as it is to the affiliate.
Correct.
And how they protect,
reassess those bonuses too, right? I mean, I don't know how much attention you paid to this. When New York launched, Caesars was offering a $3,000 deposit bonus that they had to pull after like 6 weeks because it was just like, oh, we didn't realize how many people were going to do this. So yeah, like it's for sure on the operators too that they were going super offer heavy in a way that normal people are like. I'm not a person who wants $3,000 of my money in a sports betting app. I think that's not the average customer. And certainly you want the VIPs and the big ones, but a lot of people were taking advantage of it. So you're right there. But now that these states are a little more mature and you still don't have great permeation on the sports books, right? Like if you look at the percentage of the population in these states that are playing, it's still like teens. So there's room for affiliates to go find other customers. That's not the issue. It's that they have to go about finding them now that the ones that are motivated to seek out affiliates have dried up. And I think that's really where the shift is going to happen. And that's why Stan was so big on brand and building brands and that editorial reorganization was towards making sure that the assets that do have the closest thing to a following, like the Lines, Legal Sports Report, Play USA, have the support that they need, because those people are going to be the ones that are going to pay the bills. It's not going to be these people that just like randomly put in bonus code search into Google anymore. If that makes any sense. You're looking at me like I'm crazy.
No, because I think, look, the US market and what it's gone through, it's very unique. But I think one of the reactions here is, what is the overall view of affiliate marketing as a discipline by US operators? Because it was always going to take a different take to what is played out in Europe. And do your likes of DraftKings, your FanDuels, your Pens, do they look at affiliate marketing and go, look, we need this needs to be part of a marketing mix, and we view this as a long-term sustainable marketing channel?
I think affiliates will always be a part of it. They provide a lot of information and context that operators can't really do for themselves. And so I think they will always be a piece of it. But, are the days of like the $400 sports CPA gone? Yeah. You also, I think what's happening now too is we're reframing the concept of what an affiliate looks like. Most of these affiliates are SEO driven affiliates, and SEO is important. I'm a person, I think everyone on our team is always like a little ugh about SEO, but it plays an important role. However, I think we had a discussion on a panel with affiliate leaders in Lisbon. There is an understanding that just the way that technology is proceeding, you can no longer expect customers to come find you. You as an affiliate have to go to where people are. So that's why DraftKings and FanDuel and these sites are looking at influencers. They're looking, they're thinking very granularly and niche, and that what's really shifted is that went from, we need to find publications for people in a specific state, to more, we need to find micro fan bases. We need to find that group of people that are just like super, super jazzed about the Columbus Blue Jackets, and get our content and our offers in front of these eyeballs. So that's where it's shifted a little bit. And again, there's going to be a place for affiliates, because in most states here, you need to have a license to be an affiliate. So you can't really just like call up some 22-year-old with an internet following and be like, hey, slap this offer on your content and we'll pay you. They do need to broker through somebody. But you're seeing some of the groups that are more successful, like SGG Media is a group of micro influencers, and they seem to be performing quite well. Betting Hero is an affiliate that continues to perform really well. And what it is that they're fundamentally different than an SEO affiliate. Betting Hero is about going out to sporting events, to local events, and having like actual human beings saying, oh, hey, let me help you download that app on your phone, and let me help you walk through the process. And that's how that model works. And I think we're going to see more alternative models than the Google straight search play.
SBC Leaders connects the gambling industry's top-tier operators and associations to share the best ideas, collaborate on solving the biggest issues, and push innovation throughout the betting and gaming industry. If you're an operator and want to join the discussion, visit sbcleaders.com for more information.
So talking here about alternatives, and do you think that there is a cultural clash between these European affiliate PLCs going to North American markets and just believing that they can rely on SEO and a couple of partnerships to make, to make income, to make high income, and then the need to kind of they're now being matched against kind of more localized affiliates at a state level who understand kind of local audiences. And isn't that just another case of gaming, kind of the history of gaming repeating itself, where we've seen that at the operator level this year with a lot of withdrawals from the market from European businesses?
I think it's a little different than the European operator rush. That most of them failed because there was no localization in what they were doing. It was just, we're going to transplant this product that has worked for us over here, and we're going to go put it in a few states. If you look at the big affiliates, Catena, I was part of the group that was acquired, that was originally called Catena US, that is now, the fund, it's 89% of the revenue now, but that started as a homegrown affiliate company in the US that was brought into the portfolio through acquisition. And I think if you look at most of the media outlets, like the Action Network deal was a huge acquisition. Adam Small's group that had Sports Handle for BC was a huge acquisition. Affiliates understood, if we need to get in front of American audiences, we can't have somebody who, doesn't know when to put a Z where where y'all would normally put an S. Like, that content's not going to land with them. I think that was always, I, as someone who worked in the affiliate space for a long time, I sniff out European writers real fast, and it just doesn't sit with us. It's just like, oh, so you don't know what you're talking about is what you're saying. That's just the audience. It doesn't ring sincere. So I think that to give the affiliates some amount of credit over some of these operator failures we've seen, there was an understanding you have to get hyper local. And when you hear them talking about Brazil, even more so than the US, Latin America is one that if you do not have sincerity and localization in what you're doing, you're going to fail. And they fully realize that. But to think about kind of where things went wrong, that M&A moment, most people overpaid a lot for most of these US assets. Yes, you know what I mean?
Yes. But that's across the board, though.
Yes, correct.
Yeah. Which kind of leads me to my next question, because a lot of the incumbents now, they're revising their assets, their portfolios. And does this present like an opportunity for the bigger fish or other types of incumbents in the media space to buy a cheap iGaming asset or an iGaming media asset as these PLCs are revising their portfolios?
I think the affiliates themselves, I don't think they can M&A their way out of this at this point. I think what you're looking at is, are groups going to continue to target affiliates and bring them into their portfolio the way Sport Radar is going to do with XL Media. The fact that GeoComply is now a partial owner in Betting Hero. I'm curious your take on it. We talked about it a little on here a couple weeks ago. Charlie and I did. I guess to me, I understand that there's value in being kind of a robust, multifaceted supplier, but it's interesting to me that the people that are the buyers in these situations are turning out to be suppliers for things that are not really media related, geolocation, sports data. Sport Radar is certainly a little more media leaning, and I think you can do a lot of media around that data. But why do you think it is that the buyers in this market are a bunch of suppliers? It's a bit surprising, right?
Look, I am surprised by that move, especially in the States and with everyone knowing kind of the hurdles to growth in that market. However, looking at it from Sports Radar's view, 30 million to get themselves into a new gaming segment, it's pretty cheap. Yeah. I think that they can take that risk and build something. I think if that acquisition of XL Media assets becomes quite a solid foundation, it would have proved that by right. And I don't think that it has to be a complete kind of accelerator of EBITDA or revenues. I think that they can take quite a conservative approach to actually building an affiliate network, knowing what's gone on before them. And I don't necessarily think that it will be just for the US alone. I think they probably eye at competencies that they can gain for newer markets in South America. But yeah, I do kind of expect more kind of tech plays or tech platform plays in the affiliate space.
Yeah, who, not the buyers, mainstream media, that Stan has said Catena restructured their partnerships with more mainstream media. And I think Advanced Local is a company that is still doing some interesting stuff in the space when it comes to, state level, regional mainstream media. But that Google update did a lot of things. What it destroyed were those partnerships, as it should, like when a business magazine like Forbes is ranking number 1 for like pet insurance, when you search for things on Google, Google's broken. That's not how that's supposed to work. And so I think some of these like slap and play kind of decisions that were happening in these media partnerships where the affiliate is like, hi, here's 30 pages. Each of these pages is 1,500 words long. And like, here's a 1,500 word page about betting on volleyball that I need you to put on your site. Like, I think they're going to be a little more thoughtful about it of, okay, what does the person who goes to Forbes all the time look for and is interested in? And what can we do to appeal to them? And that is the fundamental driver in what's making those content decisions versus, okay, well, the value of having a volleyball page in SEO that we can link, that Forbes is linked back to us on, will drive up our SERP on volleyball betting 22%. Like, I think that calculus has gone out the window, which to me, I'll be honest, like, thank God, because that's the part of affiliates I hate the most.
Yeah. I mean, I agree. And I think this is what's making the affiliate market interesting, because there's so kind of many verticals at play and plays that are yet to be, settled, which is completely different to what's going on before the US market launched. So look, finally, let me bring it back to you and take us out. How are you going to follow this story for the remainder of the year and into 2025?
I think for Catena in particular, I'm going to see where they're putting their resources. They have a very wide range of networks. There was a point when I was working there, my whole MO was to run the Play network, which Play USA is kind of the flagship site on that. But the intent was to have Play Texas, Play Colorado, Play California, Play everything. And I've seen them sunset a lot of those regional sites that initially had a fair amount of success because they no longer are really bringing in new revenue once the gold rush was over. So from just as a content person, I think it's going to be interesting to see which brands they believe have the most longitude and which ones have the most ability to kind of create an audience around themselves. And I think what's going to be on the business side of things most interesting is that all of these big affiliate companies seem to be kind of addressing these issues in different ways. Catena went real heavy into AI. That has been a major project of theirs. They've talked about it on previous earnings calls. Whereas Jonas War of Gentoo Media, kind of on one of our panels in Lisbon, kind of made fun of the idea that content AI is going to do anything for anybody, so they don't really believe that's the answer. So I'm going to be curious how much the portfolio kind of diversifies, because the groups that have been hit the hardest were really just pure SEO plays. They didn't have a lot going on in their portfolio besides it, and what directions they're going to take it going forward.
Well, Jess, fantastic. Well, hopefully we'll be reading all these stories on SBC Americas. Thanks once again. And thanks to the audience for tuning in.
Thank you for being host, so I don't have to for once. I appreciate the break from it. Happy Veterans Day, everyone.
Thank you for listening to today's iGaming Daily podcast, supported by Optimove, the #1 CRM marketing solution for the iGaming market. If you want to find out more about some of the subjects raised today, feel free to explore any of the sites in the SBC News Network or check out the latest edition of the SBC Leaders magazine. Happy reading.